Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 3rd of July 2020, and on Wednesday we produced a video entitled Gold Aims for $1,800 and Silver Exceeds $18. And on Monday, banks stress tests concerns and increasing gold investment demand, where we highlighted on Monday that the Fed is increasingly concerned about banks being able to have sufficient capital to survive the current financial crisis, and that investors are moving towards gold as a safe haven asset class and a hedge against the downgrading of other assets, such as equity markets and the US dollar itself. We mentioned today, or continue to mention today, this move, but it may surprise some to find that it's not all in physical gold. And on Wednesday's video, or in Wednesday's video, we pointed out that Thursday's, that is yesterday's jobs report, the US non-farm payroll, would be important, though admittedly was likely to be positive. Well, it was positive, so much so that President Trump could not say enough about it yesterday and this morning. So let's take a brief look at what Reuters actually reported yesterday about the non-farm payrolls and its significance. Reuters article dated 2nd of July 2020. Headline: US jobs growth roars back, but COVID-19 resurgence threatens recovery. The US economy created jobs at a record clip in June as more restaurants and bars reopened, but 31.5 million Americans were collecting unemployment checks in the middle of the month, and a resurgence in COVID-19 cases suggested the labour market could suffer a setback in July. Record spikes in new coronavirus infections in large parts of the country, including Arizona and the highly populated states of California, Florida, and Texas, have forced several jurisdictions to scale back or pause reopenings and send some workers back home. The flare-up in the respiratory illness, which started in late June and hit bars and restaurants hard, was not captured in the Labour Department's closely watched monthly employment report published on Thursday because the government surveyed businesses in the middle of the month. June may be the calm before the storm, said Chris Rupke, chief economist at MUFG in New York. We cannot be sure the labour market recovery will continue at a speed that is sufficient to put the millions and millions of Americans made jobless in this recession back to work. Non-farm payrolls surged by 4.8 million jobs in June, the most since the government started keeping records in 1939. Payrolls rebounded 2.699 million in May after an historic plunge of 20.787 million in April. Economists polled by Reuters had forecast payrolls would increase by 3 million jobs in June. Still, employment is 14.7 million jobs below its pre-pandemic level. The jobs recouped are for workers who were temporarily unemployed. President Donald Trump, whose opinion poll numbers have tanked as he struggles to manage the pandemic, economic crisis, and protests over racial injustice 4 months before the November the 3rd election, hailed the job gains as proof of our economy is roaring back. Though the second straight month of strong hiring added to a stream of data, including consumer spending, in suggesting that the recession which started in February was likely over, that is all history as the coronavirus rages. Federal Reserve Chair Jerome Powell this week said the economic outlook is extraordinarily uncertain and would depend on our success in containing the virus. Hiring last month was boosted by the typically low-paying leisure and hospitality industry, which brought back 2.1 million jobs, accounting for about 2/5 of the rise in payrolls. The return of these workers pushed down average wages 1.2%. Companies are cutting wages and hours. The average work week dropped to 34.5 hours from 34.7 hours in May. The measurement of the unemployment rate continued to be biased downward by people misclassifying themselves as being employed but absent from work last month. The jobless rate fell to 11.1% from 13.3% in May. Without the misclassification, it would have been 12.3%. The unemployment rate is 7.6 percentage points above its February level. Unemployment dropped for all gender and demographic groups, though joblessness stayed disproportionately high among blacks and Hispanics. The number of people who've permanently lost their job increased 588,000 to 2.9 million. So the main concern is that the figures were gathered mid-month and haven't fully taken into account the recent rise in COVID-19 infections and what may result as a result in stalling economic growth, if not even a reversal. Well, we shall of course see more at the end of this month when the next job figures are announced. Now, we thought we would wait until today to see how markets reacted to those figures, and tomorrow in our weekly update we will of course provide a comprehensive picture. But needless to say, though, that broadly equities rose throughout yesterday, though today European markets are mostly down, and of course the United States is enjoying its pre-July 4th holiday. Now, at the time of producing this video, gold stands at $1,775, and silver is managing, albeit barely, to hold above the $18 level and is currently $18.07. Similar prices to Wednesday, and so the jobs report so far has not had such a dramatic effect, or so it would seem. Now, of course, investors are nervous, even though economic news is relatively positive. But as we've stated in many times in recent weeks, once this pandemic is all but over, we are still of the opinion that it will take 2 to 3 years before those jobs which have been lost because of the pandemic will be regained again, at least in full. And this is operating on the optimistic belief that they will be totally regained in the first place. And of that, we are still uncertain. What is also worth bearing in mind, and a cautionary note for those following the gold pumpers, is that physical demand for gold in Asia, and especially India, is currently down, and down a lot. Let's just take a brief look at today's Reuters article on this very subject. Reuters article dated July 3rd, 2020. Headline: Asia gold physical demand in China, India continues to wane as virus weighs. Chinese discounts rise to $20 to $25 per ounce. Domestic prices in India soar to all-time high. Some consumers start selling gold to cash in on high prices. Steady activity in Singapore. Japanese premiums up. Physical gold demand in top consumers China and India continued to struggle due to the COVID-19 pandemic this week, while investment activity ticked up in Singapore and Japan. Chinese discounts rose to $20 to $25 an ounce over benchmark spot prices from $10 to $20 last week. Most physical businesses are still down. There's only some trading on the Shanghai Gold Exchange, said Peter Fung, head of dealing at Wang Fung Precious Metals. Global spot gold prices hit a near 8-year peak of $1,788.96 this week. People who lost jobs are selling their gold, said Samson Lee, a Hong Kong-based precious metal analyst at Refinitiv GFMS. In Hong Kong, gold was sold at 50 cents an ounce, discounts to a 50 cents premium. China's May net gold imports via Hong Kong fell below exports for the second straight month in May as domestic supply remained abundant. The mainland could be a net exporter in June too, Lee said. In India, gold futures hit a record of 48,982 rupees, which is $655.63 per 10 grams on Wednesday. Jewelry stores have resumed operations, but retail buyers aren't making purchases due to higher prices. said Ashok Jain, proprietor of Mumbai-based gold wholesaler. Discounts rose to about $22 an ounce over official prices, including a 12.5% import and 3% sales tax from $18 last week. India's gold imports plunged 86% year-on-year in June amid coronavirus lockdowns. Meanwhile, the country's cases crossed 600,000 on Thursday. Meanwhile, activity picked up in Singapore, where gold was sold at 80 cents to $1.50 per ounce premiums. We saw more activity compared to last week, but 70% of all these trades were clients selling to us, said Brian Lan of Singapore-based dealer Gold Silver Central. Japanese premiums rose to 25 cents to 50 cents an ounce. With retail prices in yen soaring, people are paying more attention to gold as an investment asset now, a trader at Tokyo-based retailer Tokuriki Honton said. Okay, not too positive, but we can at least take some comfort in the knowledge that investors, and especially those in the paper markets, such as futures and options, are still positive gold and silver, and they're rather amusingly buoying the market. Amusing because so many have condemned these markets, the paper markets, for keeping precious metal prices subdued, whereas at the moment one could strongly argue they're keeping them sustained at the current high prices, and may very well push them even higher. Now, as mentioned earlier, we shall publish our Gold and Silver Weekly Update tomorrow, so until then, do share your thoughts on what has been discussed today. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.